Well, the markets are open. I'm Marlon Bowling, your tour guide to the ag commodities, and let's take a look at what they are doing as we open them up this morning on a full trading week again. Here we go. On the corn, we have the nearby May, 17.5 higher. A lot of your volume is now in July or further out, and July is up 17 3/4 cents, and it is above $8. It's at 801.5. And now you have new crop December corn rallying 14 cents, so that puts us at 749.25, only one tick from our high of the day at this point. Well, let's move on to soybeans. What are they doing? Here you have the May contract up 26.25, the active July 25 higher at 1690.25, and November new crop is up 18.25 at 1519 3/4. Big action here so far in the grains. Is the wheat any different? No, it is not. In fact, it's even higher gains here. You have the May contract in Chicago, 31.25 higher, and so is July. It's up, well, now 31 higher at 1135.5. Big gains in the wheat, and the nearbys are showing the most strength here in the wheat market. On Kansas City's wheat, we have May up 28.25. July is now 28 3/4 higher. We're at 1186. It got as high as 1190.5. Already a 30-cent trading range in that July contract overnight and this morning. Now to Minneapolis spring wheat. Lots of concern. Christina was just talking about the weather delays that are likely in many areas where they're going to have to try and get that spring wheat put in this year. It may take a while. And you have July spring wheat now 25.5 higher at 1172.25, within a nickel of its high of the day so far. Had a low last night of 1146 3/4. Wow, that's quite an open. And let's bring in Dewey Strickler of AgWatch Market Advisors. He's in Franklin, Kentucky. Well, I guess there was a lot of powder in the cannon this morning as everybody waited for that long holiday weekend to get over. Dewey, your thoughts on how we're opening up here?
Well, I'm not too terribly surprised with the way the markets are acting here right now. We have been trading quite some time on inflationary expectations, also to the Ukraine-Russia conflict, but that seems to be common old news here. But you've got weather now is starting to creep into the marketplace a little bit. Over the next 2 weeks, we're going to be looking at about 3 or 4 systems going to come through the Midwest here that's going to offer a little bit of rainfall, and that's going to keep field work and planting at a crawl here. So that is having an impact on the corn and also giving a little bit of support here to the wheat because of the low ratings.
You know, on the corn, we continue to make new contract highs as we go. It's not like a rocket ship. It just keeps inching higher every day. Is it healthier to do it that way?
Yes, it is. Rather than see the knee-jerk reactions, one thing I've noticed, especially in the corn, and that is you do have your traditional funds are involved on the long side here. But also you have your index funds or your institutional funds have been the ones really supporting this market. So that's just telling me that the concerns are really more about inflationary issues than anything else right now. But like I said earlier, we're seeing a little weather creep back in.
Now, the corn is making new contract highs as we go. On the soybeans, now it looks like they are trying to do that as well, but the nearby contracts, it's a little bit different story here on the makeup of the market. But how do you read the tea leaves when you look at new crop opportunities on beans versus corn right now?
I think we could set some new highs on the beans, but then it's going to be payback time.
Okay. Well, I appreciate you explaining that. Now, Dewey, we're going to take a break right here, and then we want to jump over and take a look at how we're opening up in cattle and hogs. We'll talk about that in just a moment. Let's talk about the Dow Jones Industrial Average right now. Let's take a look at how it's holding up. And in the face of everything else going on, it has been choppy too. June futures there had a low of 34,184. Now they're back up to 34,489. So now they're up 120 points. This is on the Dow futures. On the U.S. dollar index, we've been talking about how it's above par value now. And June is at 100.590. That's up 264 points. And the crude oil trade, it was higher overnight. Last night, when I went to bed, when I came into work this morning, it was actually a touch lower, and now it's back almost on the high again. Now we're at 108.51 on the May contract. That's up $1.56 per barrel right now. Well, let's switch over to our live cattle. How are we opening up? Well, here you go. You have the June now 90 cents higher. We're at 137.32, almost on the high of the day. We're only one tick from it here so far. The nearbys have the most strength. On the feeders, you have the May contract $1.45 lower at 160.32. I guess that's not a big surprise with the big up move in the corn. In the lean hog trade, everything is higher by triple digits on the first 4 contract months. Let's single out June. It's up $1.22. We're at 119.70 per hundredweight there. So let's bring back in Dewey Strickler and talk about this. On the cattle side, a little divergent trade. The live cattle firming up. The feeder cattle are not. Explain what's going on.
Well, I think, you pretty well summed it up with the feeder cattle with the corn market rising here. I think what's supporting the futures is that the futures are at a discount to the cash. Cutout was higher last week, cash up a bit. So that's given the futures a little bit of a lift here today.
So on the June live cattle chart that we have up on the screen here, it has been very choppy, but it has been coming back here the last couple of weeks, the way it seems. How healthy is the makeup of this live cattle futures market right now?
Well, I'm a little bit, let's say, skeptical of the meats in general, and because I'm very skeptical of the economy. When you look, we got consumer spending at a record high, consumer debts at a record high. Credit card debt is almost at a record high, but personal savings are down near 2010 lows. That's telling me that consumers have pretty well spent all of their stimulus checks and so forth, and they're going to be looking at some tough times, especially with rates going higher.
Interesting stuff. All right. Thank you, Dewey. Good to talk with you again. Dewey Strickler, AgWatch Market Advisors, with us as we kick off a Monday. Janet, back to you.